All right, let's get back on Nike. Shares of Nike are getting run over in the pre-market after reporting a quarter littered with red flags. Brad, lots to get to in this quarter. I want to start with inventory. We mentioned it moments ago, but up 44% year over year. In North America, up 65% year over year. That is, in my humble opinion, that is a direct reflect of everything we saw in the GDP report yesterday and in the first half of the year. GDP coming down, consumers pulling back, balking at some of these price increases that Nike is trying to push through. And now, moving forward, and part of the reason why you're seeing the stock under pressure here in the pre-market, inventory, yes, but now they're going out and discounting a lot more to clear through this inventory, hopefully within the next 6 months.
But at the same time, there's no clear indication that everything is resolved, at least on the logistical front. Inventories were up 44% compared to the prior year, but it's driven by volatility and transit times in North America. And if Nike is experiencing that and not paying up also to get that inventory at the right time to different wholesale partners or work that through wholesale partners and also get that into their own stores, then what does that spell out around the rest of the brands that are navigating around this too? If Nike, with one of the biggest kind of treasure troves of cash to be able to, and biggest kind of elbows that they can throw around to either box out competition or just absolutely outcompete or overspend to prioritize their delivery times, if they're not doing so, and perhaps that's part of the cost management structure that's taking place right now that we know all brands are navigating through. But if they're not doing that, then what does that spell out around some of the other competitors, not just in the athletic footwear and apparel categories, but even in some of the other kind of manufactured retail parts of the market in the industry too?
Well, you're seeing, good point. We're seeing pressure across the board here in the pre-market. Nike is putting a dark cloud over the entire retail space. Dick's Sporting Goods under pressure, Adidas under pressure, Puma under pressure, Foot Locker under pressure. And we sat here a couple days ago. We broke that news when VF Corp came out here and warned materially by, I believe, 50 cents on earnings. We said this sets the stage for what Nike is going to report today. That's why you tune into Yahoo Finance, because you're getting that type of analysis. Quick little sales job. But nonetheless, I also want to take Nike's management team to task here. Another just not a good earnings call from the standpoint they're trying to tell a tale and a story. And I understand they're trying to make things seem positive in a long environment, in a tough environment, but still just another delusional earnings call from this team. Get to the point. Stop telling us all these great, amazing things you're doing. Tell us what's going wrong. When might it get done? And give us some more data. I just hate these Nike earnings calls. I hate them, Brad.
Well, in the interim period of time, we're going to hate a lot of these earnings calls, quite frankly, because even if we think back to what we were talking about with VF Corp earlier this week, talking about 5-year metrics right now.
What are you doing?
Nike, similarly so, pointing out to the future, giving us some of what they're expecting and how they're going to be kind of looking towards those long-term financial goals. And that is really going to hinge on some of the new buying members that they're taking into this digital ecosystem. Of course, they talked about that over the course of this quarter and how that was able to continue to ramp up. And that's really the type of consumer that a Nike or really any of the direct-to-consumer brands want, because they know that that's a consumer that has more propensity to come back, make repeat purchases. Almost think of them like an Amazon Prime type of member or subscriber, in that they're going to have a higher kind of ticket or average amount of transactions than a typical customer that might not be so religious to one brand or another and is just looking for, a sneaker that's going to get them through their run. The members that make their way into these loyalty programs are going to be more important than ever right now for the brands especially, and also for the consumers, because the consumers might see more of the deal annexation or cost savings in that period of time, while the brands are going to rely on being able to have those return customers kind of baked into their forecasting for recurring revenue as well right now.
One final point here. They mentioned on the conference call, and you need to be paying attention to this if you're an investor, tech stocks, industrials, you name it. Nike, a 6 percentage point hit from currency volatility in the quarter. That was an acceleration from, I believe, 4% in the prior quarter. So a good little fun fact there. Then they hopped on the conference call, said over the next 12 months, they will see an $800 million hit to profits from these swings in currencies. This is going to be one of the biggest topics this earnings season. When you're seeing the dollar at 20-year highs, multinationals, their sales, their profits are going to be hammered. And likely that's going to be reflected in the guidance, and it was reflected in Nike's guidance.
Yeah, we're going to continue to watch shares of NKE as we get closer to the start of today's trading activity.